Hi, everyone. Today is Tuesday, June 9th, 2026. And welcome to this very special live interview on X, being simulcast on Reddit for viewers there, and rebroadcast on YouTube on several channels as well. And let me introduce myself. I am Laptop Travel, a 45-year veteran trader who spent decades navigating every kind of market you can imagine, going back before the crash of 1987. These days, I run an investment newsletter, conduct deep dive research, and work within the story trading Discord community as an analyst, where we focus on the real stories that actually move the stocks, not just the noise. So please follow me on X at Laptop Travel for great stock picks and investing ideas. A quick disclaimer before we dive in. Nothing said here today by me or our guests should be taken as investment advice or a recommendation to buy, sell, or hold any security. This is for informational and entertainment purposes only. Always do your own due diligence and consult with a qualified financial advisor. Past performance is no guarantee of future results. The markets can be volatile, as we have seen recently in the past few days, and you can lose money. Well, with that out of the way, excuse me, welcome everyone to this live interview. I'm thrilled to introduce today's guest, David Halabu, CEO of ZSQR Incorporated, with the NASDAQ symbol of Zulu Sierra Quebec Romeo. David brings extensive experience into the capital markets, trading, real estate, and asset acquisition to one of the most exciting players today in the digital infrastructure. And having served as CEO of ZSQR's operating subsidiary since June of 2024, he was appointed co-CEO in April of this year and then became the sole CEO in May of 2026. In his role, David leads the company's overall strategic direction, capital markets initiatives, real estate acquisitions, and the aggressive expansion into AI infrastructure and power-constrained data center solutions, all critical as ZSQR scales its next-generation facilities. So ZSQR is a vertically integrated digital infrastructure company building the next-generation facilities designed to meet the massive power and compute demands of artificial intelligence. We know this has been an ongoing dialogue and question for everyone in the markets about power. ZSQR also will be maintaining their roots in high-performance digital asset operations. And under its leadership, the company is positioning itself at the forefront of the AI infrastructure boom. Well, David, welcome to the show. I am so excited to dive into your vision for ZSQR and the state of AI infrastructure and what's ahead for the company.
Thank you for having me. This is awesome. Yeah, we're excited to talk about it. So excited to share our story and however we can help clarify anything that we're allowed to talk about.
So, David, can you just walk us through in the beginning your background and what first drew you to ZSQR?
Sure. So I started my early career as a trader right out of college, 1998. What you would call day trading at back then was called proprietary trading. You'd come on a desk, you'd work as a clerk, make $400 a week living in New York after a pretty powerful high education. So you're kind of questioning a lot of things at the time. Eventually worked my way up, learned how to trade, worked my way up to heading a desk, eventually running a desk, eventually leading a group. At one point we had 40 traders under our kind of supervision. I moved to Florida post 9/11, ran a group there, remote traders. So I learned risk management, flexibility. I learned the powers of technology. So towards the end of my career, you saw the birth of algorithmic trading, which essentially changed the landscape of trading. We were short-term traders, a lot of merger arbitrage. Say average trade length would be either short-term to 2 to 3 days. With the birth of algorithms, you saw that compress faster and faster trading, different types of people coming into the industry, PhD types, physics, trading desks as we knew it back when I started kind of don't even exist anymore in the same fashion. It's a different world, a faster world. And I'm kind of seeing a lot of the same similarities in the new world of AI, where a lot of people are worried about their jobs and the fast pace and knowledge being taken over by machines. But we were able to morph and find different opportunities, just like there's a vast world of new opportunities that are gonna happen due to the ever evolving and growth of the knowledge base of the AI models, and as they get better and better.
Absolutely. Yeah.
So post credit crisis.
So you went through the .com bubble and burst.
Yep.
Baptism by fire.
Yep. Throw you into the pool with no life jacket.
Okay. So what first drew you to Z-squared?
So post credit crisis, I eventually left the trading business. I got involved with a number of different alternatives. We got into the real estate space. Like I said, I was living in South Florida. We started purchasing non-performing debt. Me and a couple buddies. We started doing bridge loans. Got involved with fixing and flipping properties. We were doing small apartment buildings, commercial. I'm from Michigan. We were doing a bunch of deals in Michigan. So I really got involved in the real estate space as an alternative to trading. By then I had 3 kids. I was looking for more, predictable revenue, predictable income. I had made some money as a trader, so I wanted to put it to work. I got involved with other roll-ups with some family friends. We started rolling up dental offices, and we did a dental wholesale deal. We did a bunch of other medical deals. We worked with different private equity funds. We worked with individual owners of offices, kind of put them under one umbrella, and then we would sell them to private equity groups. We would stay on different deals. So we've been doing that, or we were doing that for a while. Then I got involved with another group where we're doing something on the horizontal infrastructure development side, where you would clear the land, develop it on behalf of, Lennar and the DR Hortons of the world, more on the capital markets strategy side, less on the operational side. And we started to see rumblings of power applications taking longer to get approved. You started hearing about it on the news about, AI and the growth of, at first it was ChatGPT made a big rumble. I remember the first time I used ChatGPT, it was almost like the first time I went on Netscape back in like late high school, early college, and I was like, oh my God, this is like incredible. It was like, I literally remember the first time I used ChatGPT. And the first question I asked was, who's better, Michael Jordan or LeBron? And it gave me like stats and pros and cons. And I was like, this is like earth shattering. Obviously, this was a couple of years ago. So we got involved with Z-squared, early Trump administration. Z-squared was actually a mining altcoin crypto miner. Those are the assets that we purchased as part of this reverse merger to take it public. At the time, crypto was really high. The Trump administration had, there was a lot of enthusiasm for cryptocurrencies and mining, and it was extremely profitable at the time that we had engaged in this reverse triangular merger. Fast forward, I think it's like 16 months. It's almost like a different world, both in crypto and power assets. You see the divergence of the mining revenues and profitability versus the demand and access to power. So we made a shift in our mindset to say, hey, a lot of the powered assets that we have or have control or work with, we're going to convert those to data center AI because they're power now. And oh, by the way, we have a lot of relationships in the space, and we're going to see how we can maximize those relationships and those sites that those relationships have in a way that benefits everybody, shareholders, asset owners included. So that's kind of the thesis of where we're moving forward.
Yeah.
Hopefully
So,
that answers a lot.
yeah, well, it does. I'm sure investors and listeners have a few more questions. Can
Yeah.
you start off by giving visitors, our viewers and listeners, just a brief overview of Z Squared's business model? You know, what is it that you actually do, and how is that related to AI infrastructure? And what was you said you're still in the digital asset portion of the business as well?
Well, so we still have the mining portion of the business. It's still ongoing. So, but it's not the main focus going forward of the business.
Sure.
So we have, I don't know how much I can say. So what's public is we have one site under LOI. We're doing the diligence. I can use that as an example. Included in the diligence is making sure that there's a short-term process for energy, which we know we have on site, backup energy, what's that's going to cost, 2 points of fiber, and then all the other kind of nuances that go with site clearance, approvals, teeing it up, and then going to market for a lease. So that's essentially the business that we're looking at on the numerous fronts out there. You know, you're looking at sites, you're making sure they're viable, both power-wise, land-wise, cost-wise, infrastructure-wise, connectivity-wise. You're coming up with a plan to, you know, purchase it, fund it, provide the CapEx. You know what your carrying costs will be. And then you have some version of a model where this is the lease rates. And then based on the lease rates, you go to market for construction, you know, due to the client credit. You know, those are separate structures. We can dive deeper into the boring legalities of structuring these deals and SPVs and what have you. But yeah, I mean, it's only been, I think, 5 or 6 weeks since we've been public, and you know, we're full head of steam.
Yeah. Exciting. So, so everything is on a lease structure, right, for the company?
Sorry, when you say lease structure, you mean if we do a build out to the tenant?
Yes.
Yeah. It would be a colo. We were looking at, yes, that's the direction we want to go, into a lease structure. Yeah, we're not in. We don't. If there's an opportunity that obviously makes tremendous amount of sense, we'll never say no, of just igniting power and just flipping the land. But the thesis is turning it on, getting the lease, and doing the build out. We have the team and the infrastructure to do that.
Okay. So now that you've taken on this role as sole CEO of Z Squared, what do you see as your personal vision for the company, say in the next few years? Maybe it's so hard to look far out, but say 2 years. What's your vision?
So my vision, and we're trying to execute on it, is we see like a gap. I'd say, and I'm making up numbers, call it the 25 to 100 megawatt sites. You know, currently powered, a lot of, like we talked about, crypto, you know, sites, former sites, guys that may or may not be making money, including guys that have non-crypto guys that are, or developers that are going out, getting entitlements, getting approvals, and then realizing like, all right, cool, I got this powered land. How the hell am I going to fund the second part of getting it built out? And you know, I don't even know how to do it, or you know, where do I even start to get a lease? And it could, because the CapEx, like the land part is just one part.
Sure.
The building part is infinitely more expensive and very technical. So there are different layers similar to the other business we were in, where you have the infrastructure developer who essentially buys the farmland, clears the trees, you know, gets the entitlements, gets it permit ready, make sure that you could build X number of houses. And then you're on a plan where, you know, every year you're selling 200 homes to Lennar, and then Lennar's building the home, right? So there's a couple of groups like that we're talking to about working together. As power becomes more and more scarce, we see that a lot of the groups at first were demanding, 200 megawatt minimum, and then it became 100 megawatt minimum. I mean, you just saw Amazon just did a 70 megawatt lease. I've heard other guys, which I don't know if it's public or non-public information, doing leases for 40 megawatts. I think it's Cerberus. So you're starting to see everyone come downstream in terms of like, hey, you have power, like I'm just willing to pay for it, because the opportunity cost is so high to wait the 2 or 3 years. And these bigger projects are getting harder and harder to get approved in the municipalities and the localities, depending on where they're at. So our thesis is, obviously, if we get a larger deal, and we may or may not be looking at some, we're going to pursue it if it makes sense mathematically, economically, and feasibility wise for us. But we are seeing a lot of opportunities on some of those smaller sites. And that was the thesis when we said, hey, we're a tenant in a couple of these things, and the highest and best use is not really what we're doing right now.
Right. So David, we talk about power. I mean, Jensen Huang's recently talked about can't even imagine how much power is going to be needed in the future for AI. The Trump administration has recently, taken a very aggressive
It's national emergency.
and a posture towards nuclear. How do you feel about portable nuclear? Do you see that as being a part of your future with AI and these build-outs?
I could talk more to the tech team about what their thoughts are on the portable nuclear. I don't claim to be an expert. I do have thoughts on nuclear as an individual, not representing the company. I do think a lot of the nuclear technology in the United States is probably 50 years old. I'm assuming, given the growth and how smart we are as a country and how amazing we are technology-wise, that the newer technologies could eliminate or at least reduce a lot of the risks and the perceptions that people have of having a nuclear powered plant. You're seeing it in like France and other countries where I might be screwing it up, but it's a very high portion of their energy is nuclear. It's cheap. It's cheaper. It's efficient. I'd have to lean on the technical team, to be honest with you, more about portable nuclear and how that would work on specific sites. A lot of that depends on redundancy. Will the tenant accept it, right? You have tenant demands. So it wouldn't just be a decision for us. You got to make sure you have uptime. But me personally, I wish this country would move more into a pro-nuclear phase, because I do think it's a very high capex, very long lead time to getting up and running. But the benefits, in my opinion, again, Dave Halabu, will far outweigh the costs if done properly. It's kind of like our airport like flight technology. I think it's like 50 years old and it's never been like updated or something.
Oh yeah, airlines still use dot matrix printers in the
correct terminal. Yeah. So again, I don't claim to be an expert. It's just what I read. I read a lot. I'm still a nerd at heart, proudly. And again, personal feelings on the nuclear. I like it if there's a path forward.
Yeah, that's great. You you were with the company, CEO of the subsidiary, I think in June of 2024, and so you've had 2 years in these various roles. What are the key lessons that you've learned in the last 2 years that have you prepared to take the company forward?
So I think it's 2025, to be honest with you, which is fine. Okay. And in the year, it's been an interesting year, because we didn't officially take control of the business until the triangular merger happened. But obviously, I was learning about mining and rewards and opportunities in the space, and it kept going back to like, well, we're using all this power, and then on this side, all these people are paying a premium for power, and I just keep hearing about like I can't get power, and meanwhile like our teams like literally build powered sites from scratch. So I'm like, you know, highest and best use might not be, you know, rewards on mining. It might be, you know, utilizing this power in a real estate component, really, with power plus real estate as the product per se.
Sure.
It's very familiar to the world that I was in before because I was doing it for 10 years. You know, acquiring sites, repurposing developments, with this component of electricity and some other complexities, not to bore too many people with what needs to be done. And I was like, man, this is just a natural fit. But we couldn't really do anything until we were public, because obviously that's when, you know, the money comes into the company and we have the currency of the stock and access to more capital, et cetera, et cetera. So it is a very expensive game. I would say that's the barrier to entry.
Sure.
But I guess I don't know if that answers your direct question, but getting into the business is what led me to see like, and obviously I read a lot and I see what's going on and I follow the markets based on my history. And I was like, this is a higher and best use of the assets that we're working with. Now, how do we, you know, maneuver those? I mean, there's contracts, there's power contracts, there's a lot of stuff that goes into, you can't just like take a crypto site and then be like, all right, I'm moving these machines out and I'm putting AI machines in. It doesn't work like that. It's a totally different infrastructure. It's like saying, I give the analogy, if you have a beautiful house on the water, if you have an old 1940s house on the water, but your neighbor has this like brand new 2025, you know, high ceilings, all glass mansion, they're not the same house. You're both on the water, but that old house from the 40s, you kind of got to take it down and then rebuild the mansion. So think of it in that sense.
Yeah. It talked about capital requirements. It's very intensive. You recently secured a 50 million committed equity from Lucent, giving you, I believe, significant flexibility.
Yep. We're very excited about that. Yep.
How do you plan to prioritize your draws? Will they be primarily tied to specific acquisitions like Skycore, which you recently did, or more broadly across your phase 100 megawatt target?
I would say a combination of the two. So I'm going to speak in generalities. It gives us the opportunity to show miners or landowners that we have the financial strength to close on a transaction. Obviously, that's important. People want to know that you can close. B, like a Skycore deal, which is a stock deal, it gives us the capital we need to prep the land, bring in whatever we need to bring in to get it prep ready for the eventual lease and construction element of that specific asset. I would say you can use that model and replicate it in many fashions. Combination of stock and cash, and then obviously like a guy that's doing grading or pouring concrete, he's not taking stock, right? I'm paying the guy, so we need to make sure we have enough money to get it prepped. And then most of these assets, if not all of them, will probably sit on an SPV level off balance sheet. So when we do actually do the construction, and the build out, there'll be a debt and equity component. We're trying to keep the balance sheet as clean as possible. That's why you saw it wasn't a debt transaction; it was an equity transaction. And then that way we can keep our parent co balance sheet pristine. And then as we get investors for each deal, they can feel comfortable that they're investing in one specific deal where they have modeled numbers and they can underwrite the credit of the tenant versus the whole company. And are these guys gunslingers, which we're not. It solves a lot of problems, not problems, like potential questions about closing, prep work, getting the work done, and going to the next project.
Okay.
Yeah.
Are you at liberty to give it on your phase one plan to reach 100 megawatts of AI-ready infrastructure? Any timelines or milestones that you can share?
I wish I could share a lot.
Of course.
I don't know what I'm allowed or not allowed to say.
Okay.
Just given but I'm very confident we'll get to that under management, ownership, whatever you want to call it. In a again, I don't know what the right word is, in a proper amount of time that we deem to be fit. Obviously, it'll all be accretive to Z-Squared, our investors, and the people, the groups that join us in whatever capacity.
Yeah. How has do you see Z-Squared's prior experience in distributed computing facilities for crypto mining? How have you been able to translate that into a competitive advantage in this AI space that you're now
So
in?
that's a really good question. So we've looked at a number of deals in and around some of the locations where we are mining, and because we either got those sites up and running in conjunction with the landowners, or have been in those facilities for a while, a couple of the members on our team have really good experience, even going from land to powered on in some instances. So they understand, again, I'm not the tech guy, but they understand all the nuances with regards to like timing, cost, transformers, calling BS on certain things that are being told to us by other guys we're talking to. So every time I'm talking to a group, I always have at least one of our technical guys on the call just for efficiency. I'm a pure finance guy at heart. I've done a ton of deals, transactions, roll-ups. I could read a balance sheet. I am not the technical guy that knows connectivity and wattages and all that stuff. And there are, again, nuanced little things that can make or break a deal that I don't claim to be an expert on.
Okay. You recently announced the planned acquisition of Skycore Digital.
Yeah.
And so what made this asset strategically attractive to you and Z-Squared?
So first and foremost, we do have mining computers there. So it could reduce our cost of mining, obviously, because we were a tenant. Second of all, so there's two sites, 6 megs and 18 megs, and then both sites are going to get additional power. So 18 will go to 30, 6 will go to 12. We know the sites really well. We're friendly with the team that owns it, and they're helping us underwrite some of this other stuff that we're talking about. Specifically the 30 meg site, we know the connectivity is there, the land is there. We can convert that site. So we're just going through final due diligence for the most part, we know. But we're still going through the due diligence and the times to make sure that we got it right. But that was the thesis of that. And it was a good deal for both parties. It's all stock. We maintain the cash that we have on balance sheet to do exactly what I said we're going to need to do. There's going to be prep work that needs to be needed. There's going to be generators that need to be bought. There's going to be another fiber line that needs to be brought on. So we could do the prep work relatively low output of cash and then go to market. So, and it's here now. The power's here. We're not waiting for it,
So the deal immediately adds more megawatts with a path towards even greater. So how meaningful is this deal for the scale for your company's growth roadmap? That accumulation.
I think it's meaningful for a couple of reasons. I think it shows that the street that we're serious about moving in this direction. We're spending, obviously, stock, time, money, effort. Leases don't happen overnight, as you know. But we're two of the stages done because we have the power and we have the site. So now it's just going to be prepping and going to market. It also lays the foundation for us to show that we could do it. We're in the market to do it. As we talk to other folks, we kind of point to it and say, look, this is how we did the other deal. If this is of interest, we can move in this direction, but we are serious about it. I think that's pretty much it. I mean, it was our first deal, but it shows that we're serious and we're moving in that direction. It changes the narrative of the company.
Your answer to this question might be similar, I think, about your comment about the perhaps antiquated nuclear infrastructure the country has. But let me ask you, because investors want to know, why do you think, especially today, are energized megawatts and existing utility connections just so difficult to secure in today's market?
Oh, man. So the interconnection queue in the US, and I'm probably screwing this up, I think was 300 gigawatts in 2020. It's 2,700 gigawatts today. So it's 9x applications for gigawatts. I could speak on behalf of North Carolina because we have a site there. And we did a lot of work there over the last, call it 5 years, unrelated to AI, but related to getting transformers on site. This used to take like a year or two process of getting answers, maybe even less in times. It's a 5-year wait now with Duke Energy. And you're giving them a deposit and you're waiting 5 years to get connected. So multiply that around the entire country. And I know there's a lot of headlines and there's a lot of gigs and more gigs and more gigs, but by the time it reaches there, you're talking about 3, 4, 5 years out before it reaches the site of whoever's applying for it, hard money sitting on deposit to get in queue. It is a real national emergency. Now there's obviously other sources of power outside of the grid. There's gas, there's solar. I mean, you brought up nuclear. Nuclear takes a long time to get up and running. I don't know much about the pods like you were talking about, but it is it's a core requirement of compute is power, and outside of a lot of the supplies that are very constrained to getting a data center up and running, depending on the size. Power is the ultimate bottleneck, however you're going to get it, right? You cannot do any of this without power.
Absolutely. Yeah.
Yeah. And then there's unused power, right? There's some sites that are not using all their power. There are some sites that have power that are not being used at their highest and best use. And so there's an arbitrage that exists in that certain circumstance, and we're just trying to get a little piece of that arbitrage. Powered sites that aren't maximizing their full value.
So beyond the power issue, the power capacity, what other elements of the value chain does ZSQR, your company, control or optimize to deliver superior AI infrastructure services to your prospective customers?
So we've got a couple of partnership agreements in place, for development post approvals. So we're very confident we can get anything built depending on, the approval process, the lease, the customer's specs, et cetera. We're very confident with that. Seasoned groups, some of which are, known. that could execute on that. I think our prowess, like I said from the beginning, is more on the site acquisition side. Given my background and a couple of background of the folks that we're working with, is finding these underutilized sites, being creative with how we acquire them with the sellers, either in a acquisition fashion of stock or some version of a JV or milestones, where it de-risks us and de-risks the seller and maximizes the opportunity for everyone involved. We're all swimming in the same direction. There's an alignment of interests. I think the fact that we started a little late is a benefit because we do have a pretty clean balance sheet. Obviously, we're not one of the biggest companies in the space doing it, but we do have a very clean company. I view that as a tremendous advantage. We can learn from the mistakes. I don't want to call them mistakes, but from the former deals of those who have done it in the past. Some of the groups that we're working with have obviously done a lot of these deals on the construction side and on the development side. And we can use their history and their challenges that they faced, doing some larger sites and middle-sized sites to our benefit collectively as we pave the way. I think this AI powered asset aggregation strategy, I don't want to say it's in its infancy because obviously there's other groups that are publicly traded that are doing it. I also don't want to say it's in the ninth inning. My guess it's probably in the second or third inning. I mean, you see a lot of private equity funds allocating huge numbers to the space, not only to data centers, but also periphery businesses that supply the data center food chain, generators, turbines, electrical companies, servicing companies, security companies. I know there's private equity funds that are only going out, putting deposits, getting land energized and flipping them out. That's their entire business model. So there is this large data center AI ecosystem being built in the United States. I don't think, again, I don't claim to be the smartest person in the world, but I don't think the smartest people in the room are allocating all this time, energy, money for something they think is closer to the end than the beginning. So,
absolutely,
we're trying to swim in the right direction. I'm trying to take a lot of the lessons I learned from trading. You're supposed to cut your losses and add to your winners. And that's what we're doing in Z squared. We're adding to our winners, and we know the direction the waves are flowing.
David, as you look ahead and you hear about the latest advancements, you see them, you have a chance even to try them, incorporate them. What do you think are the most exciting technological advancements, such as advanced cooling or maybe hardware optimizations, that you think that Z squared will be incorporating or monitoring, perhaps even for future deployments, if you don't have that right now?
So that's a great question, and I'm going to put my kindergarten technical hat on from a lot of the conversations that we've had. So with the Rubik, the new GPU that's coming out, I think it's next year from NVIDIA. Again, I'm going to screw it up, but supposedly it takes up less rack space, for lack of a better term. You can power more with less, right?
Right.
What that does is it should, in theory, at least reduce the space that you need on either a modular or a fully built concrete data center per se, depending on the size of your footprint. If you're like a 10 megawatt site, obviously you don't need the full blown, or you may have an old existing building and you put modular units inside, not to bore you. But that we are looking at that as how we want to build ours for the new generation of GPUs that are going to be smaller and more powerful. Now, that'll use a lot of energy, obviously, concentrated energy. A lot of these crypto units used to be air cooled. Now liquid cool is kind of the standard-ish. Now you're hearing NVIDIA talk about immersion cooling because of people protesting about water, or there might not be water on site, and accessibility. So again, as the industry matures, there's going to be different ways to get to the same spot in terms of, I've got power, I've got GPUs, I've got clients that are using agents or researching for the next best drug or whatever, via cloud or via hyperscaler. And then how do we put all these things together in the most efficient manner that works for everyone involved and adds productivity to, our great country, for lack of a better term. So that's technologies are going to emerge. They're going to get better. They're going to get stronger. They're, like I was saying before, outside of the private equity world that's investing, obviously the venture capital world is also investing a tremendous money in making this more efficient. We looked at a modular unit even yesterday that someone is developing. They're raising an A round, and there's just technologies is moving at light speed in this space as well, to make it more efficient, more cost efficient, because it is very expensive. But yes, the two that we see is the emergent cooling in the short term being more utilized, as well as the rack space, at least with the new Rubik coming out, not needing as much rack space per megawattage use.
Yeah, I think that Jensen said that it's for the same amount of space, you get 3 times the computing power with the new chip over the Blackwell. So
yeah,
saving 2/3 of the space.
Yeah, I mean, you'll still have
course,
hallways and space that isn't used, and bathrooms. And I'm serious, when you do a development site, offices. So I don't know if it's generally 2/3, but in terms of the rack side, yeah, it's a reduction, which is obviously a reduction in cost, right?
Sure. Yeah. How are you addressing potential challenges around the acquisition of talent in this sector, the supply chain, and even permitting as it expands, as your company expands its operational footprint?
Great question. I'm going to address that as it comes basis, depending on the severity of the issue. I know we're going to have issues. I have issues in everything that we've ever done in life, family, business, even getting out of my driveway with the guy who doesn't stop behind me. So any issue that arises, I'm not a terribly emotional person. We try to put our head down, think logically. Like I always said when I was a trader, 50% of your trades you're wrong on. You just got to, have a short memory and learn from it and move on. I don't know if that directly answers your question, but there's always going to be issues in any development. There's going to be I know this sounds crazy. There's going to be a mechanical engineer that's literally on vacation for 2 weeks and delays your project. There's going to be, the girl at permitting who forgot to submit your application. I'm just talking about my development days.
Sure.
And there's just always, a subcontractor who, does something wrong. I mean, that's why you have redundancies. That's why you have checks and balances. You make sure you have a team that's done it before. You're not always just choosing the cheapest on price. You're choosing, the best and the most efficient. But the answer to your question is there's always going to be problems in anything you do unless you do nothing, and that's a problem.
Yeah. With your recent NASDAQ milestone, how has going public influenced Z-Squared's strategic decision making and investor relations? How do you feel it's changed the animal for you?
Again, it's only been 5 weeks. The first couple of weeks was just kind of reining in internal. I would say going out to market now and talking to folks gives us a much higher profile. They know we're serious. They know we're real. We just got included in the Russell 2000 by the end of the month, so that's super exciting. It's just another like badge of honor that we can kind of point to and say, look, we're like a real company. We have the $50 million credit line. You know, we're doing Skycore, we're doing XYZ. It's so in terms of that, I think it's helped a lot because there are a lot of guys kind of brokering deals. You're starting to find out where they'll go and say, hey, I've got this, I've got that. They'll take someone under contract and then they'll just try to flip the deal. We're seeing that, especially with these miners that are kind of, you know, having a tough time with Bitcoin where it is. We've encountered that a couple times where they're like, you know, oh, this other guy offered us this, but he was just trying to flip our site. So we could show them that, like, no, we're real. You know, we're audited, we're public. Like, I'm not like lying to you. Like, you know what I mean?
Yeah, I do. Oops, sorry. Sorry. I had a problem with my mic there. Sorry. So looking ahead, are there any additional acquisition opportunities or organic growth initiatives that that investors might be aware of? Maybe not specifically, you can give us information, but perhaps generically.
So generically, I can say that the theme of our company is to find more sites that could be used for AI data centers. So that is the theme. That's the business. That's what our team's looking for. We still have the mining business. It's still up and running, but the focus on the growth of the business is fully on finding more sites, acquiring, partnering, however we're going to do it to not only reach our goal, but to beat our goal and beyond. Like I said, second or third inning, and there's 9 innings, and right now it's an aggregation play because those assets have a lot of value and are going to just be more and more valuable based on the statistics I was given earlier.
And what key metrics would you have investors to track to gauge the success of ZSQR's progress and success in the AI infrastructure sector?
I love that question. I know what you're going to say. I would say, see what we have with powered megawatts under management, because that is an asset that's very difficult to replicate. I'm not going to compare it to gold, but it's an asset that's harder to replicate given the constraints, as we talked about, on energy, interchange agreements, approvals, connectivity, time, bandwidth. You know, look at us in the lens of these guys have X number of megawatts, and over time that could be ignited into real revenue and profit generating sites.
And David, what keeps you up at night? What worries you? What, if I can ask you, and it's get a little more specific, what do you see as the biggest bottlenecks currently slowing this entire AI infrastructure deployment globally, or at least nationally?
So a couple things worry me. Number one is obviously the time it takes to get these approvals. Obviously, you know, with the avalanche of applications, a lot of these companies are not, and it's not their fault, prepared to do all the studies and approvals. So I'm assuming they're going to start ramping up, given that it's some version of a national emergency. So that worries me. I think the supply chain is a worrisome, depending on the size of the deal. You may missing 1 or 2 components and it delays you a long time, just like a regular development deal. But these missing components, obviously, the opportunity cost is in the tens of millions a month by not having components. Truthfully, interest rates going up is very worrisome, because that stops a lot of development and makes what was a good deal or a decent deal not pencil anymore. Always a big worry for anyone that's been in the real estate development business. That would probably be, obviously you need supplies, you need the supply chain to be able to satisfy what you're building on site: generators, turbines, electrical components, et cetera, et cetera. There's a shortage of electricians, da 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 da. But if interest rates go up, it's not gonna be one site. It's gonna be like essentially like a complete slowdown. I don't want to say 100% slowdown, but you will see less and less people being able to build profitably because of that. And that is not only something that keeps me up at night, and I'm assuming it keeps everyone up at night for other reasons. But I would say that would be the biggest risk right now.
It's keeping a lot of investors up every single day. I
Yeah.
can assure you, watching oil prices and waiting for the Fed. Just to throw something in, it kind of caught me off guard that Berkshire Hathaway spent $8.5 billion to buy Taylor Morrison, a home developer in the country.
Uh-huh.
If we're facing interest rates, but just maybe they know something we don't know, or they think they can do better with scale. But anyway.
I mean, I know a lot about that space given our old business.
Yeah.
I mean, I can comment on that, but Berkshire Hathaway has been very active in the home building space. I mean, they were an investor in D.R. Horton for a while, Lennar. That business is a very asset light business, if believe it or not. Most of the development work, similar to what we're talking about, is off balance sheet, and then they just essentially build homes for sale. So it's like a factory home building type business. They know that business very well. Berkshire Hathaway, they've been involved in a lot of the components as well, drywall, roofing, etc. So I would say if they're making a bet, I mean, I think there's like a $4 or $5 million homes gap in the U.S. based on where it should be. So not to go too far off of what we're doing, but smart money. Now I will say, you just talked about Berkshire. I find it very interesting that, speaking of data centers, Google, I don't know if it's the first time, but definitely the first time in a while, probably the most profitable company in the entire world, just announced an ATM because they're raising $80 billion to build more data centers and get power. And who is the biggest investor in that deal? Was Berkshire Hathaway, allocating $10 billion as a PIPE, discounted stock, to essentially help fund. And that's just equity. So there's going to be debt behind that. So if you just do a 70-30 or an 80-20, that 80 billion, it almost equates to half a trillion. And let's be nice and say it's 350 to 400 billion of development for power. Whatever you want to call it, data centers, but all data centers need power. So that, again, if the biggest, smartest, most profitable company in the world is investing all this money, I kind of feel like we're riding in the right direction.
You're on the right train, right tracks.
Yeah.
Speaking of power, how does ZSQR dynamically manage power usage based on electricity pricing and grid conditions? How's that a part of what you offer?
So we have the experience in our team based on the crypto side, the load management. With crypto, it was a little different. There was like curtailment rules. So, you would have lower cents per megawatt, call it. And then you'd have like a certain amount where you could be curtailed because you took a lower fee. So like in Texas, they might have like 1 or 2 times where you could get curtailed because they gave you, these rebates and this. So essentially they're paying you for the right to take you offline to use power elsewhere, a couple times. Same thing in North Carolina. With AI, it's a little different. You're essentially paying for firm demand. So it's a little more expensive because you're a little less flexible from what we see. In terms of the power management, obviously we'll be responsible for the power management on site. We have third-party teams, like I was telling you, that have that experience. We'd outsource that. In terms of the costs, in terms of site by site, typically they're triple net pass-throughs. So we're not really like, unless we get really cheap power and do it on site. In our situation, at least with Skycore, it's just going to be a pass-through in that situation. most likely to the ultimate tenant, and then we'll just be responsible internally to making sure if it goes down, it's going to the secondary power use, 72-hour minimum guarantee, etc.
Okay. And David, you recently rang the bell at the NASDAQ closing. So, how was that for you, and what milestone does that mean internally for the company, and for you leading now as the new CEO?
I think it meant more for my parents than me, to be honest with you. I think they were more excited to see, their son on TV and some of the fruits of our hard work over time. It was pretty cool. It was an amazing experience. I'm not going to lie. It was cool. It was exciting. I'd love to go back there as Z squared after we, do X number of megawatts and celebrate again. And, I know some companies go back after a couple of years. It was awesome for the team. We have a lot of remote members, so it was cool for everyone to gather in New York and celebrate together and see the confetti. That was super exciting. It was exciting for everyone who worked on the deal because it took so long to put together. Our lawyers were there, our auditors were there. I think it was just it was more of a celebration of the next step. But like I told everyone there, like, now the work starts. For me, that was just like the baptism, and now you got to start working, because there's a lot of work ahead of us. You can see under the bags under my eyes, I don't sleep that much. If you want to email me at 11 o'clock on a Saturday, you will get a response right away. So for me, it was a celebration short term, but it was really a marcation of like, now you got to make things happen because all these people are depending on you and everyone's watching you.
Absolutely. Including your parents.
Especially my parents. My dad will call me like, the stock was down. I'm like, dude, stop watching it.
I can appreciate that. David, we're almost out of time. I have so many more questions. A fascinating business and structure, and I'm sure there's a lot of great things ahead for you.
I'm happy to come on in a couple months if you want me to update you on progress. Hopefully there's more I could talk about, because there's a lot I can't really talk about. You tell me whatever you need. Like I said, shoot me an email, hit me up. I'm happy to tell our story. I want everyone to know our story. I know we're new to the market. I'm happy to answer questions, the easy ones, the tough ones. Some I may not be able to answer, as you see. But yeah, excited to do this. This was awesome. And anything you need from me.
Yeah, I forget that I'm here for a moment, but I want you to just address potential investors, I would say.
Okay.
And is there anything you want to share with them and the viewers and listeners about your vision and Z Squared's mission, and the opportunities ahead in AI infrastructure, or any final message that you might have for current and especially prospective shareholders?
I would just say, take a look at what we've got going on. Take a look at the business plan. Take a look at the landscape of the lateral that we're playing in. It's only getting bigger. I feel like we have a very nice competitive advantage because we're again, pristine balance sheet, ready to do acquisitions, ready to grow. Very, very, very nimble and flexible team. We're not weighted with a lot of legacy stuff, and we have a singular focus of just growing and aggregating these underappreciated sites into one vehicle. Let's call it Z squared. And if you believe in the potential of power and energy and site management, take a look at our stock, because that's the business that we're in, and we're going to only grow.
Well, thank you. I would recommend to everyone to go and look at Z Squared's website. It's quite interesting. It's very clean, very well done. A lot of information there. So thank you, David, for taking time so much to join us today. I know you have a busy schedule and always busy, and providing such a clear and insightful view of Z-Squared's business model and progress. Today's interview was not an endorsement to buy or sell any security. You have to do your own research and check out their website. Really, you'll appreciate it, folks. Thank you so much again.
Thank you for having me. If you need me in the future, I'll be here for you. Just let me know.